Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's take a look again on the euro currency. So you could see we're actually not occasionally have worried yesterday, and it's even price behavior that we discussed in the morning was showing that something is wrong with the bearish performance, so it should not be in the way that it was yesterday. So that's why I said that, well, actually it looks a bit suspicious, and better to not take any new short positions by far. And we agreed to see what will happen and what the pullback will be and how strong it will be. So because we said that we expect the upward action, but still it might be different, and maybe it just will be not as strong. Well, it is possible, will be possible to keep the bearish context that we had. But currently, I would say that probably is not. So action stands really strong. And well, at least in the short-term charts, I mean daily and intraday charts. Here it seems that market really intends to challenge the previous top. At the same time, overall price behavior here looks a bit heavy. So the upward performance every time when it happens, it needs some external support, some external boost from some factors. So yesterday it was the Jerome Powell statement. And these splashes of the prices to the upside, it looks a bit, well, it's lack of some strong background. So it emotionally sees very strong, but this strong activity lasts for a short term. So for days, maybe 2-3 days, but then everything returns back its own. So it means that overall sentiment on the market is not very positive, and this market is not ready for sharp reversal and upside action because we have no fundamental for that. Yesterday, so mostly was the same as we saw in the minutes. We have taken an in-depth analysis of the Fed minutes if you read our report. Here with the recent statement from Jerome Powell, actually some kind of the trick stands. It's just because the most evident thing that he said is that Fed should a bit slow down and maybe even make the pause in a rate change. And that's easily to catch. So it stands on the surface. And that's why markets are just hanging for this news and trying to use it for trading, for activity. But they do not see what really stands a bit blurred. So what stands behind this decision? And behind this decision, as we said, this Fed actually doesn't know how strong rates should be raised to control the inflation. Definitely it should be higher. But Fed actually just a bit scaring to acknowledge it to itself. Well, and that particular moment, investors and markets missed. So because you need to dig to get the truth. And as a result, you could see this type of action right now that we have. At the same time, I would say that in general, this bearish, some bearish clouds around this current performance is still growing. So this bearish context is arriving gradually, and probably we should get it. And particularly speaking, we're coming to bread body trade on the monthly chart. So we talked about for a long time already, but this is monthly chart. It needs a lot of time to be formed. For instance, on the dollar index, you could see we've got the first important moment. By the end of the November, market has closed below the 3x3 moving average. This is first necessary condition for the bread body. Next necessary conditions is that within the 3 candles, market has to touch one of the strong levels. So first candle already have, another 2 months needed to touch at least this level. So probably this could be achieved relatively soon. The same story we have on the euro currency. Euro currency also has closed by the end of November above the 3x3 moving average, but it also hasn't quite reached yet the 30% level, and which is actually on the euro 105.78. And take a look what we have on the daily. Market is growing up. We have the reversal bar here, and we have few extensions and targets above the market. So first of all, we could use as a resistance probably. It's not the target, but this is additional resistance. It's 127 extension of the most recent swing. It stands 105.94, 105.95 actually, which is perfectly fits to the 30% resistance on the monthly chart. And second one, this is XOP, another XOP on the daily chart. So first one was from this A, B, C, D pattern. It already has been completed right there. Now we have more extended objective point based on this larger ABCD, and it stands around 106.32. So these two extensions accurately envelop the fib level on the monthly chart, and potentially that might become the level where market could well, start the bread body trade. Maybe some pattern also will be formed around it, because currently I am not considering higher standing levels just because market is overbought on the weekly chart. And when the market stands overbought near the monthly fib level, it's really very small chances that we will get some more extended action. It's more probable that bread body should start in December and right from this area, somewhere on this level. The same story we could probably stand around the dollar index. Dollar index also oversold on the weekly chart, and it means that small chances that bread body starts at the nearest level. Well, that's what about longer term charts. On the intraday chart, actually, what do we have on the 4 time frame chart? Recall what I said about this action yesterday, that it doesn't fit to normal bearish market. It's too tight, too gradual. Bearish market should show the progress in absolutely different manner. And indeed, very soon our prediction has happened. Now, I think that we could ignore this pattern. It's just because if you will take a look at the lower time frames, the type of action that we see here on the hourly chart absolutely doesn't fit to idea of the bearish retracement on the bearish pattern. So this is very strong thrusting sign, and market already has broken through the 618 resistance. This is not the pullback. This is challenge of this pattern and is erasing of this pattern. It means that market will go higher. So it means that no shorts, as we said yesterday. So also, by the way, take a look at this wage pattern, divergence, so everything worked perfect. So we not consider any shorts by far. We need to see when this action will housed. For the short-term bullish positions, you could use this most recent thrusting action, which is actually, you could see this reversal bar on the daily chart, and use of the possible fib levels to take the position with it, with the targets somewhere around the top. So probably market should take it out of this top. Hopefully it will reach this level, because on the weekly chart, yes, it has some room. As you can see, overbought for this week stands 105.85. So until the 105.85, 105.90, it's really a free space, and market could challenge this resistance that we already talked. And take a look, this is not only fib level, this is also confluence resistance on the weekly. It's important because here we have the hidden reaction points from the gap that has been formed there in January, and that is hidden fib level. I talked about this in the weekly report. Well, that's actually what we have as a bottom line. No shorts by far. Bulls could consider possible taking a position based on some pullback here using the fib levels on the hourly chart, with the target, well, at least above the top, but most probably this will be somewhere around 105.80, 105.95 area. So that's what we have here.